I seem to get a lot of interesting data that passes over my desk as we get closer to the election. And I wanted to share one of those pieces with you. And it's specifically on the approval rating of the president. And we can look at history and we can say, based upon approval ratings, how does the stock market do? Now, you'd think that a higher approval rating would be better for the stock market. And there might be some truth to that. But when you look at the approval rating that's a little less than 50%, we see some pretty interesting data. Now, this looks at the president's approval rating over their term. And you can see if it was over 50%, so they had an approval rating of over half, so half the folks in America approved of what the president was doing, then the stock market averaged 6.6%. What I thought was fascinating is that when the approval rating was between 35 to 50%, the stock market did the best when you look at history and earned, on average, yes, some was higher, some were lower, 9.3%. Approval rating less than 35%, well, that wasn't real good for the economy. If no one approves of the president, stock market doesn't really like that. If everyone approves of the president, stock market does okay. But again, in that 35% to 50% approval rating, that's when the stock market has done best when we unpack history together. Again, I know the elections can be very stressful for a lot of you. If you have questions about your investments, if you want to know how things are set up or how the outcome of the election could affect you, please don't hesitate to reach out. I'm certainly here as a resource.